Welcome to the Starting Over Stronger show, where you'll find help and hope for your divorce survival and recovery. Divorce well, live well.
As you're contemplating a divorce, it's very important to just work with professionals that can evaluate your overall current financial situation, help you understand what you need out of your divorce settlement and how it will affect you not only today, but many years into the future.
Hey guys, welcome back to Starting Over Stronger, Divorce Survival and Recovery. Today we are talking about one of the biggest concerns most people have when they face divorce, money. My guest is Brandy Branstetter. Brandy is the Principal Wealth Advisor at Beyond Wealth in Overland Park, Kansas. She's a certified financial planner, and I'm going to just introduce her now and let her tell you a little bit about her company and what she does for people going through divorce. Hello and welcome, Brandy.
Yeah, hi Annie. Thank you for having me on the podcast today.
You are welcome.
Thank you. Just a little bit about me and Beyond Wealth. So like you said, I'm a certified financial planner and I own a firm called Beyond Wealth, and we really focus on kind of working with those clients on their overall financial plan when their finances are getting a little too complex for them to handle on their own, or they don't have enough time and things like that. And one of the groups of individuals that I really focus on working with are women going through divorce. And after 15 years in the industry and owning my firm for the last 5 years, I've just noticed that there's a lot of special things that we can do to help these women as they're going through divorce, especially when it comes to looking at their finances and knowing what it is they need to be aware of as they're going through the process.
Okay, great. Well, thank you. I'm glad to know that those kind of services are available to our listeners, and that's why I had you on today. I'm glad that we got connected. Do you remember who was it that introduced us? I was trying to think of it last night.
So I believe it was Connie Jabara with Sunflower Insurance Benefits.
Yep. She was awesome. I've already talked to her about having her on too, because after my divorce, she was someone that I got connected with to talk about how to structure my healthcare benefits now that I was not going to be on a corporate plan with my ex. So definitely going to be talking with her about that. So, well, I will have to thank her again for introducing us, and definitely have her on the show soon. So let's get back to talking about money. Today, Brandy is here to share with you her wisdom from years of working with people going through divorce. And the way we're going to do this is just summarize it in a top 10 list of the financial mistakes that you want to avoid when you're going through divorce. So we're just going to get right to it. The first mistake that Brandy is wanting to bring to our attention is ignoring or underestimating your expenses.
Yeah, that is a big one. And that's kind of one I see most often when meeting with people that are talking about, okay, we're going through divorce and I just, it's very emotional and people are stressed, and money is something people are stressed about already anyway. Mm-hmm. So it just exacerbates the stress when we're going through divorce and talking about those things. So sometimes one of the very first things that we really have to understand when kind of trying to figure out what an appropriate divorce settlement is understanding, what your monthly income need is every month. And it's so hard for the majority of people out there to really sit down and be able to tell us exactly what are their fixed expenses, what are their non-discretionary variable expenses. Even the people who are really, really good with their finances sometimes have problems with this, because it's really easy for a lot of times for us to rattle off kind of what our bills are. Like, we know how much our rent payment is maybe, and we know how much we pay for our electric bill and things like that. But when it comes to kind of some of the more variable things, a lot of the times it's surprising to understand when you sit down and actually go back through a couple months worth of spending or credit card statements. How much do I spend on groceries every month? Yeah. How much do we spend on just miscellaneous shopping? The kid needs a new pair of shoes, or I ran to Target and, I got groceries, but you know how we all do at Target. And I also picked up this shirt and this throw pillow and this lamp and, a water bottle.
Yeah, I know exactly what you mean.
Yeah, most of us go through that. So I think a lot of the times why it's so important when you're talking about a divorce is because your attorney is going to ask you to start filling out all of these spreadsheets to talk about, okay, what are your true expenses? And it's really, really important to get that right from the get-go. So then that way you can understand what is realistic to you when you guys start talking about splitting up assets, or if maybe you'll be receiving a maintenance or alimony payment or child support payment. In addition to the income you're earning at your job, is that going to be enough to continue to maintain your current lifestyle? Or do we need to look at other alternatives, which are decreasing the amount of money that you spend every month, or possibly looking at ways to generate more income for yourself? So maybe a part-time job, or maybe a different job altogether. I find that it's even harder a lot of the times for the women that are going through the divorce, who maybe are the ones who are kind of hands-off in the relationship when it comes to the finances. Because when you're not used to looking at it every month, it's really hard to kind of pinpoint that. And a lot of the times it's very far from reality of, oh, we probably spend $100 on putting gas in the car. And then when you finally dig into it, you're like, oh my gosh, we spend way more than that.
Yeah, that makes sense.
Yeah, money in, money out. And sometimes we don't pay attention to it as long as we've got enough in the bank account to cover the expenses, right?
Right. And it's all changing now, so we've got to reassess everything.
Absolutely.
Okay, well, that's good. So the next one is, I think, a big one. That is failing to stand up for yourself. Tell us more about that.
Yes, this is a huge one. And I feel like a lot of the times, especially as women, we are really used to putting other people's needs ahead of our own, right? And I'm sure you see that a lot, especially when you're doing consulting and coaching with people going through divorce.
Yeah, absolutely.
And going through the divorce process is sometimes hard for people because you have really got to put yourself front and center. And that's tough.
Yeah.
And a lot of the times we feel maybe embarrassed, or we're not confident because we don't like talking about money, or we don't understand things about money. And maybe especially if you've always relied on your ex-spouse to handle the finances, you just have kind of made yourself feel like you're not maybe able to understand these things as well as maybe he did, or vice versa. So it's just really, really important to take this time and be vocal. Ask questions. If there's something somebody is saying that you don't understand about your settlement or your finances in general, don't just sit back and go with the flow. This is the time that you need to step up and say, wait a second. Now, why would we split this way? Or what is this stock option account you're talking about? Or I didn't realize we had a second mortgage on the house. What is this line of credit? What was it used for? How does the interest rate work? What are the payments? No question is a dumb question, because ultimately, as you're going through this divorce, you rarely get an opportunity to make corrections or fix mistakes in the future. It's very permanent, right? So what's done is done. So don't be afraid to stand up for yourself. You just can't lay down and be a doormat as you're going through this situation. And I know it's hard for a lot of people because they feel guilty, or they think that they're being combative, you know, with their ex-spouse as they're going through this stuff. But honestly, you just got to look out for the best interest of yourself and the other people in your family that you know that you're going to have to be taking care of, especially if there's kids involved.
Yeah, and you know, the thing is, we actually kind of talked about this a little bit in a recent episode with someone on the subject of self-care. And I'm thinking the exact same thought now as we talked about then, which is, if you don't take care of yourself, who will? You're the only one. And that's going to be kind of a new life skill going forward. Like, there isn't somebody that's going to, quote unquote, take care of me, if there ever has been. And so you have to put yourself first. And it's not selfish. And that is really hard for a lot of people to wrap their head around, because they've maybe been told that their whole life. And, we're not going to get into the societal ills of feminism, but,
Right.
just the fact that so often as women, we do feel like if we make waves, we're doing something wrong. And the truth is that, like you said, you have to make sure you understand every little thing that's happening and ask questions. That's what your attorney is for. That's what the mediator is for, to help you understand what you're agreeing to and making sure that it's fair. So definitely a very big one.
Right. And just a little bit more on that, your attorney, your mediator, as far as your finances go, though, it's super important to have somebody in your corner to specifically help you understand all the details of that information, because it is pretty far off of most attorneys' radar.
Oh, yeah.
To talk about those things.
Right.
They're good at, helping you understand the numbers and splitting things up, or, trying to go through the process, but their job is to help you get to a settlement.
Right. You're right. And I've told people that a lot, because the fact is that a lot of people go into divorce thinking that their attorneys know everything about everything and that that's the only person they need in their corner. And most attorneys will tell you, please do not think that. Like, I am a legal expert. I am not a financial expert. I am not a real estate expert. I am not an emotional expert. And I don't want to play any of those roles in your life. So absolutely, you need a multifaceted approach to understanding your divorce and your settlement and getting the support that you need through that time. So
Absolutely.
definitely. Okay, so number 3 is thinking that splitting property 50-50 is a fair way to divide property. And when I read that, I was like, what? It's not? So tell us.
Yeah, let me explain. So ideally, if you're getting a divorce, like, you'll split everything 50-50. But not every single asset is treated the same. And so let's just use an easy example, and we'll say there's $1 million of property for the marital asset. And let's say there's 5 different types of accounts there. We have our primary residence, so that's an asset. Maybe we have a 401k account. Mm-hmm. Maybe there's a stock option account. Maybe there's cash in the bank. And the last asset is some stock investments.
Okay.
Well, we're not just going to look at all 5 of those accounts and say, okay, well, if the house is worth $500,000, we're going to split that evenly. You get $250,000 of the house, and the other person gets $200,000. And we know in real estate that's not possible. You can't just split a house down the middle.
Right.
But we try to treat our investment assets and our cash the same way, and looking at it saying, oh, well, if the 401k is $200,000, well, we each get $100,000 and we move on our way. But what I'm trying to say is that there's so much that can go into making sure that each party is equalized in their split of assets and liabilities that, you've just got to look at all the different scenarios that come into play, and you have to look at how taxes are going to affect some of those things. In the instance that I gave with the different types of investment accounts, well, if one investment account is $100,000 and the other investment account is $100,000, well, on paper, that looks equal, right? And your divorce attorney will say, fair market, that's equal. But what if one of them is an illiquid asset that's only going to earn you 3% rate of return, versus the other $100,000, which is a liquid asset that is has been earning close to a 10% rate of return? Those really aren't equal, are they? Mm-hmm. So we've got to look at all of these aspects that come into play, and engaging a financial professional who can dig into the details and really, really help you understand the specifics of what's involved is super important when you're addressing those issues. And also in the issue of splitting up debt. A lot of the times we don't just take, oh, there's $20,000 on a credit card. Well, this person gets $10,000 and the other person has to pay back $10,000. You have to kind of mix and match it a little bit. Each person will end up being equal, but it might not be an exact 50-50 split down the middle of each individual asset or liability you own.
Okay. Yeah, that makes sense. Okay, number 4 is not considering the long-term implication of your divorce settlement.
Yeah, so I say that this is kind of ranks up to the top. And as we're going through these top 10, they're not in any particular order,
Okay,
right? They're all very, very important.
Yeah.
But not understanding the long-term implications of your divorce is so important, because I think a lot of the times as we're going through the divorce process, we get very short-sighted and we say, well, for me today, I need that cash in the bank account because I need to figure out how I'm going to pay my mortgage payment next month because I'm dying to keep this house. Mm-hmm. Well, we have to make sure that as we're addressing these settlement options, we're looking at the long-term ramifications of what is going to happen of the choices you're making today, as is everything in life, right?
Right, yeah.
For example, what if, we're dealing with a husband-wife situation where the wife has been staying home with kids and raising kids and hasn't been out into the workforce for maybe the last 10 years. And yet the husband makes $250,000 a year. Well, let's say we're splitting the assets up and everything like that, and we get them all together. Well, what are the long-term possibility of the wife who has not worked outside of the home in a long time getting a job in the future that is going to be able to help her not only just pay her expenses, but will she even be able to continue to save for her own retirement after the fact? And if the answer is well, maybe you could get a job making $50,000 a year and that could cover your basic expenses. That probably won't allow you to save anything for retirement. So maybe when we're looking at splitting the assets, we take a little bit more of the marital retirement assets, because his opportunity at making $250,000 a year, being able to fully maximize his 401k for the indefinite future, is really high versus what we're going to be able to do for ourselves in the future. So it's making sure that we're looking at things not only how it affects us today and what we need in the short term, but how is it going to affect us 5 years from now, 10 years from now, 20 years from now down the road as well.
Yeah. And those are the kinds of things that people just don't think about, because, I always say you're in the middle of, the time in your life when you are as emotionally incapacitated as you will ever be, and subsequently or at the same time having to make the biggest decisions of your life. And, if you don't have someone with the expertise that you have as a financial advisor that is able to help you understand all of this, you're probably going to settle for way less than you should, because you've got your whole life to look forward to and you just don't know what's coming.
Well, and another point to add to this that I could have made a whole point on its own as a number 11, but I was trying to keep it all nice and tidy into 10, is trying to figure out how to distance yourself as far as possible from your ex if you're looking at support payments or child care plans and arrangements. Because there's been so many times I'll see people put into their agreement for like child support or something like that, oh, we'll just put together a joint checking account and we'll each put money into there, and then we'll just use all of those expenses to cover the expenses for the kids. And they're not thinking, what if 5 years from now I get remarried? Or, which is a huge possibility, right? Or my ex gets remarried, right? Yeah. Or is his new spouse really going to think that, oh, that's a good way? Because there's just still going to be so much contact between you and your ex. And so it's really, really important as you're laying out all of these things that you think might work for you guys today, that you can outline how these are going to work for you maybe 10 years down the road. Maybe if you guys each have different families at that point, or if you each have different scenarios. I have one example of a client that got divorced, and instead of having her ex write the alimony terms into the contract, he said, well, I'll just pay you for the next 5 years, and then I promise between you and I will continue to pay you for the remaining 5 years, but let's just not put it into the agreement because tax situation and all of the things that go along into it. That is a huge red flag, because if it's not legally binding in that settlement agreement, as much as you might want to trust or believe that they're going to continue to look out for you or take care of you, especially if you guys are having a good divorce agreement and settlement, which is definitely, known to happen. It's just so important that he's now remarried, and I'm sure that his new wife is probably like, wait a second, where does it say in your thing that you still have to keep paying your ex-wife $4,000 a month? That starts to get to be very risky, especially if you need that money to live on, because you can't make that income up to support yourself without that alimony payment.
Yeah.
So
it's unfortunate, that you have to think that way, but you are, you're going through a divorce for a reason, and that is severing a relationship, and your best protection is to completely sever every relationship, every joint debt, every joint asset. It just, all of it is what it is, that it is a separation, and it needs to be that. And there's a lot of reasons that we won't get into right now as to why that is. But number 5 you have here is forgetting to account for taxes.
Everybody loves taxes, right? No, taxes play a huge role in identifying how you're going to look at your assets and liabilities as far as an appropriate settlement split, because certain things are going to be taxed differently. If you're going to be getting half of your ex-spouse's 401k account, do you realize that you can't touch that money until a certain time period without paying a bunch of taxes on it? So it's really important to get clear on what your future financial plan looks like, to understand what are those tax implications going to be. For example, remember we were talking earlier about that asset division, and say there's 2 investment accounts, each worth $100,000. Well, what if on one of them, when I go to take that $100,000 out of the investment accounts, I'm going to owe $20,000 in taxes, versus the other account on the $100,000, if I were to take the money out, I'd owe 0 on taxes.
That's a big
Should
difference.
those be treated the same just because they're worth the same amount of money? And that is the unfortunate part, that your divorce lawyer is not going to be digging into the details to help you understand those things. That's not their job.
Right.
So those are things to look at. And another thing on taxes, honestly, people who have been paying taxes their whole life, and I will say the majority of folks don't understand how their taxes are even calculated or how tax brackets work. And that's not anything to be embarrassed about. Not stick your head in the sand because you just are afraid of figuring it out. But there's a huge difference on filing taxes, married filing jointly, versus now if you're going to be filing taxes as a single person.
Yes.
Right?
Absolutely.
And if there's kids involved, who's going to claim the kids for the deductions? Are you going to split every other year? Who's going to get the mortgage interest? There's just a lot of things to consider when we're looking at tax implications that need to go into the overall plan when you're looking through your settlement options.
Yeah, absolutely. That was a big factor in my divorce as well, and I had to do what you said and just humble myself and say, you know what, I don't understand all this stuff. Somebody needs to dumb it down for me because I want to make sure I really understand what's happening. And as a result, I ended up being prepped for mediation, in that I was going to, one of my important points was that I was going to ask for the tax deduction for our youngest, because even though he was splitting his time between us, he wasn't a young kid, he was I think 17 at the time, but he was splitting his time between us, and we didn't have a parenting plan or anything like that. But his dad covered his insurance, his medical insurance and stuff, but other than that, neither one of us really had a lot of expenses, because he had a job and he took care of himself for the most part. But the reason why I argued for the tax deduction is not because I necessarily have more expenses for the child, but because I had less income. And I'm also self-employed, and I need every tax deduction I can get versus, he's, an employee somewhere, and he's making way more money than me. So he definitely had the ability to cope with that loss more than I would. And so those are ways that you definitely want to think about with forgetting to account for taxes. So
Yeah.
Number 6 is the emotional attachment to assets.
Yeah, absolutely. And I know you probably see this a lot of times as well too, but as I'm dealing with a lot of my clients who are going through divorce, there is a lot of the times one party is very, very emotionally attached to the family home and get kind of blinded by the idea of, well, I'm going to take the home without really considering all of the different alternatives or even considering, you know, what it takes to, you know, the cost to maintain a home. Mm-hmm. Can you even afford this home on your own? Because a lot of the times what happens, and I'm sure you see this a lot, couples go through the divorce process, settle on who's going to get the home, and then they have to go through the refinance process, and the person who has decided that they're going to keep the home can't actually qualify for a mortgage on their own term now that the divorce is final. And so that throws a wrench into things.
Absolutely. See it all the time.
Yeah.
And, you know, it's totally avoidable. That's the thing that's so difficult about it, is just, you know, trying to get in front of people or in the ears of people who need to hear this when they need to hear it. Because so often it's oh, I wish I'd known that, you know, kind of a thing. But as a divorce real estate consultant, the biggest mistake I see in divorce that affects women for years to come is how they handle that shared real estate. And many times it's because the decision to keep the house is emotional, and the person who keeps it doesn't, like you said, doesn't count all the holding costs. And for example, you know, some of the things I've seen, are there any liens against the house? So I mean, literally I've had people say, I don't even know what that means.
I've had certain situations where all of a sudden it comes out in the divorce process that maybe one of the people in the relationship has taken out a ton of debt against the home. Mm-hmm. And I've even had one situation where he actually forged her signature on loan documents, and there were, you know, which meant that she was on the hook for it as well. I mean, there was other things she had to do to try to get through that, but it just added a lot of stress to the situation, to where it was kind of like, well, now I just want to be out from under this, and I can't, because I've got all of this stuff that I didn't even realize was going on. Right,
absolutely. And, you know, so liens is one thing. There's sometimes home equity lines of credit. You mentioned that. And in one situation that I was aware of, there was a home equity line of credit that did get addressed during the divorce, and they paid it off through the settlement, but they never closed the account. And the ex was using it basically like an ATM for about 3 years.
Oh my gosh.
She had kept the house. He knew how to access those funds. I think it was 2 or 3 years later, she went to sell the house, and she couldn't, because there was all this extra debt on it. And of course, there are things that can be done, but you've got to hire an attorney and go through that whole process again.
Right.
And what should have happened is that account should have been closed.
Well, and you bring up a really good point on all jointly held accounts, credit card accounts, bank accounts, things like that. I know a lot of the times people going through a divorce, sometimes one party will clean out the joint bank account before, which is so silly, because there's no way that they're not going to track that money down and know that you took it out. But once the divorce is final, you need to make sure that that joint party is getting removed from the accounts, or even if you have a credit card that one of you is an authorized user of, and it's on the other person's credit account, making sure that you're getting all of those loose ends tied up. So, you know, one party isn't walking around still racking up charges on your credit card because you were negligent in going through and checking and making sure that they didn't still have access to your personal stuff. You would hope that doesn't happen, but, you know, we hear horror stories on divorce all the time.
We hear all the worst stories. And then, you know, the thing is that sometimes those kinds of things can happen without malice. You know, a person may not even think about the fact that they're affecting the ex-spouse. They may not know they're on that account. But the thing is that you can find that out in advance. And I actually interviewed a credit repair specialist, and we talked about the importance of running your credit report early in the process and watching it.
Yes.
Get it on a monitor and check it all the time. And that'll do a lot of things. One, it'll let you know if something fishy does come up, but it also might remind you of accounts that you've long since forgotten about that still need to be severed. And so that is an important thing. And another thing is, one that very rarely gets addressed, is the condition of the house. What if, you decde to keep the house, but you don't have any idea that there's a faulty roof, a failing HVAC, a crack in the foundation? I mean, I've seen all of these things.
Yes. Oh my gosh. Yes.
You keep the house, and you guys determine a value, and that's another thing, how you determine the value,
right? And
getting that done fairly. But even beyond that, then you've got the house now, and you're stuck with this $10,000 foundation issue, or maybe there was a situation where the roof had an insurance claim on it, but the other party didn't know that because they filed the claim and then they put the money. It was like $9,000. They put the money in an account that she knew nothing about. So not only is that insurance fraud, obviously, but now she has an uninsurable roof. And so the things that end up happening as a result of all of these kinds of little loose ends is foreclosure, bankruptcy, forced short sale, failed loan origination, failed refinance, like you mentioned earlier. Things that devastate people financially when they're just starting to get on their feet after the divorce.
Well, and to that point, if we're talking about an equitable division of assets, and all of a sudden we go back to our $1 million example, and he gets $500,000 and I get $500,000, but part of that $500,000 was a valuation on a home that was valued inappropriately, and my house, instead of being $500,000, is really only worth $400,000. Did I just agree to a short end of the stick because we didn't do our due diligence to make sure that we had an appropriate valuation in the beginning? And I think that's so smart. I mean, why not pay the $500 to have an inspection done and an appraisal done?
Right.
I find it's so tough when people are going through divorce because it's that short-sighted, that short-term, oh my gosh, all these costs, my lawyer's expensive, doing the divorce is expensive, paying a financial planner for advice might be expensive, getting my CPA to do up some tax work. All we are seeing is cha-ching, 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 all these dollar signs going out the door, but in the long run, it is the best investment you can make for yourself is to make sure that you get this done right in the beginning, because it's so much more costly to you to have to go back and try and fix it later on down the road, right?
Oh yeah, absolutely. Costly and sometimes just absolutely impossible.
Impossible.
Because property division is permanent.
Absolutely.
So
unless both parties can re-agree, and
right.
the probability of that happening is slim to none.
Yeah, exactly. So the thing is that as well as mortgage guidance, all of these things can be done now before you go to mediation, before you make a final decision on the settlement. And when do you want to find these things out? Before or after the divorce, But these are the kinds of things that lawyers don't address. They don't know to, or they just don't have the time to. It's not their expertise. So
yeah, it's not their job,
right,
honestly.
Right. So I just, that's one thing that I focus on with people because of my specialization in divorce. I just want people to be aware of the information that is out there to inform their decision. It's still their decision whether or not they want to sell the house, find something new. But I just like people to know for sure every single possible outcome. And sometimes that requires looking at it from a different perspective, just
Absolutely.
reframing it and thinking, yes, I really want the kids to not be uprooted and stay in the same schools because there's already so much other change happening. But there's also the fact that there's maybe some bad memories there, and maybe a fresh start would do everybody some good. And being in a home, whether it's a rental or a new home that you own, that is a more affordable payment, just frees you up so much than trying to just bear the burden of this bigger mortgage payment because you don't want to, because you think in your mind that's the only good option.
Well, and so that's a great segue into kind of, we'll skip over 7 for a second, but number 8 that I had on our list here was not evaluating multiple settlement options because of two things. Either you don't think the other party will agree to it, or you're so set in your own mind that it can only be this one way, that you leave so much on the table because you're so fixated on only one solution.
Right.
And so I know that a lot of the times in when I deal with clients going through a divorce, we always try to make sure to show 3 different settlement option scenarios. And you would be surprised how many times I get shot down because they're like, oh, he would never go for this. Or there's just no way that this could work out. And it's like, well, unless you present it as an actual option, and if both parties are trying to keep an open mind, and let's all step back and say, look, we don't know what we don't know until somebody offers a different perspective or a different solution for us to consider, right?
Right.
So why would we be so close-minded and say, oh, that won't work, or I can't do that, or like what you were saying, adamant, I have to stay in the house because that's the only way I can see my life moving forward. Yeah. Maybe you just have to have some other people shed a little light on the other side of what the possibilities are in a different settlement option, right?
Right. And, you know, even if you're still 100% sure that he's never going to go for that one, having all 3 laid out, you know, during mediation, it still allows for some brainstorming to happen that might even create a 4th scenario that's a combination of one of these 3, you know, or, you know, who knows what. But it also might definitely like make you sure that you want this one, because, you know, now you see, oh, that's the other option.
Right. And very rarely does any divorce settlement go exactly according to plan. Like we lay out those 3 options. Yeah. I would say there's only maybe a 10% chance that it's exactly one of those 3 options. It's like you said, they use those as a jumping off point to say, oh, I kind of like this idea, so maybe we do this and we try this, and then we can come up with something that we agree on that's going to work best for all parties involved. But yet you've got ammunition essentially to say, here's a couple different ways we could do it. Let's be open. Let's look through all of this. Let's not try to dig our heels in on certain things, and just be open-minded, see what works. And then if there's something that you're absolutely not going to move on, at least you know why and what the alternative scenario could be.
And on that point, be sure that, you know, when you're going into mediation, that you're definitely, you know, the few things that you have to
your
be okay.
non-negotiables.
Yeah. And then, you know, be willing to, you know, move around in the other ones. So that would go along with your point number 8, and just evaluating all of the options. So now let's jump back to number 7. Number 7 mistake in your financial decisions of your divorce is the failure to ensure the alimony payments.
Yeah, so let me just, this is a really quick one, but a lot of the times, say that in your settlement, you're awarded your ex-spouse has to pay you $2,000 a month for the next 10 years because you were married for 25 years. What happens if he dies after year 5? You're not going to get $2,000 a month. And if we've built out your whole entire future plan on the idea that you have a guaranteed $2,000 a month income, well, we've not done a very good job, because now everything's changed. Yeah. So ideally, what is really, really smart, if there's already insurance policies in place, just review those, make sure that they're set up the right way, maybe make sure that the ex-spouse gets to be the beneficiary for a portion of that payment that would pay her out for the remainder of her alimony collection term. Yeah. Same thing with disability. You know, if we say that something happens and you become disabled and you're not able to work, or you're not able to make as much money, your alimony obligations shouldn't go away. And that's another thing. Make sure you get it in writing exactly how those can be adjusted. Okay. Because if it says that it can't be adjusted if you get fired from your position, then he should not be able to take you back to court to reduce your alimony payment if he gets fired from his position. And this is something I'm dealing with a client right now.
Yeah. Well,
and she's like, it says here that they can't be adjusted based off of those principles. So get really, really clear and make sure every party agrees that what you're spending time working out, this document, this divorce decree, can actually hold up in court for the next 10, 20, 30 years. You don't want to waste all this time and then 5 years down the road something changes and then you're like, oh, well, never mind, this can't work and we have to go back to the drawing board anyway.
Right, yeah. Well, there's so many decisions to make. It's certainly easy to forget a few.
Absolutely.
So number 9 is failing to complete the entire process. What does that mean?
Yeah, so basically what I'm meaning here is that a lot of the times, like you said, there's a lot of decisions to be made, and going through a divorce settlement can be very cumbersome, and it can take a lot of time to get things figured out and split up and going in the right direction. So what I'm saying, don't forget to complete the process. Just because the settlement is done or the divorce decree is signed, now there may be 3 or 4 other things that have to get done based off of what's in the divorce decree. Do you need to refinance the house? Get it done. Don't drag your feet on it.
Yeah.
Are you entitled to 401k assets? Great. Make sure that you got a quadro drafted after you got your divorce decree. Get that stuff submitted. Make sure the judge signs it. Start moving forward on getting your assets. A lot of the times it takes, a good 6 months to a year to finalize some of these moving parts just because of the lack of ambition to can now work through it. It's a very emotional process. Yeah. We get that. But once you've done all the hard work of getting a settlement in place, don't lose steam and forget to finish out the remainder of the process and get those things done, because the quicker your divorce is over and the quicker all these things are in place, the quicker you can move on with your life, right? And that is exactly what the point of all of this is trying to put this as far behind you as quickly as possible.
Yep, absolutely. And on that note, I'm going to say that I think very few people that I have worked with through divorce have had this arrangement made. And I don't know if it was my attorney that thought of it or if it was just me that thought of it. I really don't remember. But we put a deadline written into the divorce decree that the refinance and the quadro or what any of these things that weren't going to happen until the divorce was final had to be done by X date, whatever that was. And the reason that is so important is because, one, people just get busy. Some people are just procrastinators. And then, frankly, sometimes there's obvious sabotage and, just ill will for each other. And they don't have an incentive to cooperate or make your life easy anymore. So they just put it off and put it off and put it off. And, I know somebody who 2 years later was still waiting for that refinance. Do you have any idea how badly her credit could have been destroyed by him? Because one late mortgage payment can drop your credit score by 100 points. Imagine a year or 2 years of having zero control whatsoever of the payments, but yet it's still affecting your credit.
Right.
So you want a deadline in there, and the fact is that your attorney is not always going to think of that. And in fact, in my experience, most of them don't. So be sure that you're advocating for a date to be put in there.
Well, and on that note too, a lot of the times, kind of what you said, I've had situations where it's been almost 5 years from the time of the divorce settlement before 401k assets got divvied up. And not because either party were being malicious about it. It's just neither one of them cared enough really to follow through with it. And she was supposed to get the assets. Well, she wasn't going to take him back to court because it was kind of her thing too, is that she kept forgetting, Brandy says we've got to get this quadro something or other done in order to do this. And so it's sometimes just adding all those to-dos on your task list once you've gone through an emotionally draining situation is hard. And so it doesn't have to be malicious either. Right. It could just be negligence because you're exhausted and you're just tired of dealing with it. But the quicker we get it done, right? Quicker we could move on, and the better life is afterwards.
Absolutely. And, you know, we wait and wait for that judge's signature. And then it finally comes and we breathe and we think, it's done. But it's not done. Right.
Then there's still work to do.
It is not done until everything is severed and settled. So don't give up too quickly. And so now we're going to finish out with one that I think is really, really hard not to make. A mistake that is really, really hard not to make. I mentioned it earlier. I said, when people go into divorce, they oftentimes feel like their attorney knows everything about everything and is taking care of everything. And the truth is that leaning too hard on your divorce lawyer can be a really big mistake.
Right. And like you said, we've kind of touched on this a handful of times through the conversation. Just understanding that your divorce lawyer is there to do one job. And that job is to make sure that you guys reach a settlement and you guys reach an agreement. Unfortunately, they bill by the hour, right? So every time you have some little teeny tiny question that is probably super important to get answered, it might not be worth your time or resources to shoot that email off to your attorney to ask the question, or to pick up the phone and ask them a question about, well, what if this happens? Because honestly, dealing with people going through divorce, that is a lot of time of what, you know I spend my time in is
the what ifs.
The what ifs. And we can run through 8,000 what if scenarios in our mind. And as we're going through these times, it's really hard to kind of not focus on, well, what if this bad thing happens, and what if this bad thing happens? Sometimes it's not worth the $300 an hour you're paying an attorney to ask them about some what if situation that probably isn't going to happen anyway. So,
try Googling it first.
Use other resources out there. The internet is a great resource. There's a lot of great support groups. There's resources like this that, maybe you've already answered this question with a professional that they could reach out to. I know, for instance, like, I don't charge hourly. So, a lot of the times it's easy for your client or for a client to ask me the question, and I can just kind of, granted, I'm not an attorney, so I can't give them exact advice, but I can say, from my experience or from the experience of a couple other people that have been in the same or similar situation, here's how that unfolded, or here was something you needed to be concerned with. Because a lot of the times when you're going through divorce, we understand sometimes you just need to get something off your chest, and you just need to get your question answered, or you just need to have somebody there to listen to you and maybe even talk you off a ledge for a second. And it might not be worth the price that you're paying for your divorce attorney to do that, nor does your divorce attorney want to probably be that support role for you.
Absolutely.
They're not going to be your advisor for the long term like a trusted financial professional might be. Hopefully this is a relationship you're going to be having with that person for many, many, many years down the road. So they're going to know you probably on a more personal level and all the details of your life.
Right. Yeah, and thank you for making that number 10, because it's just the perfect closing thought for what you do as well as for what I do, because as a divorce coach and a divorce real estate consultant, I am one of those people that people need to come to instead of going to their attorney. You are one of those people they need to come to instead of going to their attorney, because if it's a financial matter, you aren't going to charge as much. You are going to have the right answers with regard to their specific questions. And with divorce coaching and consulting, it is kind of two different things, because the real estate consulting is specifically the house. We talk about all those things that we talked about earlier. With what we do is basically called enhanced due diligence. We are doing the house homework. We are checking every single possible avenue of the valuation and the equity in the house, and not just assuming that your equity is your value of your house on the Zillow's estimate, don't get me started,
Right.
and minus last month's mortgage balance, because there's a lot more to it than that. But that oftentimes is the formula that's used. So these are just ways that we come into people's lives, and divorce coaching is a new field, and it is up and coming. And there is more and more training and certifications coming out to prepare people to come alongside those going through divorce and be that person for them that their divorce lawyer is not supposed to be, and just helping guide them through that process and getting them to the resources that they need, more or less as a distributor of the information, not the manufacturer of it. It is a blessing to be involved in people's lives and to be able to help them in this way. And it is also just not something that a lot of people even know exists. They just go through it, just the best that they know how, but they don't have any idea that there are people out there like you and I who will walk alongside them through this and make sure that they're not making mistakes that are going to be permanent issues in their lives. So thank you again for being here. Do you have any closing thoughts? This has definitely been insightful, and I want to give you a chance to offer anything else you have to say about it.
Yeah, I would just say in closing that as you're contemplating a divorce, it's very important to just work with professionals that can evaluate your overall current financial situation, help you understand what you need out of your divorce settlement and how it will affect you not only today, but many years into the future. Mm-hmm. And if you're interested in getting any more information about me or my services, feel free. You can go out to my website. It's www.beyond-wealth.com. And there's a ton of information on there that talks about how we work with divorcees. And feel free to just pop on there and schedule a quick introductory 15-minute telephone call. I'd be more than happy to chat with you kind of about your situation, let you know a little bit more about my process, the pricing, the services I provide, and if it might be a mutual fit for us to work together as you're kind of going through this.
Awesome. Well, thank you. I hope this has really helped you listeners to understand what not to do financially as you face divorce. And I just want to say that from my perspective as a divorce coach, this is the biggest source of stress that I see in women that I work with as coach. They give up what they shouldn't out of fear, exasperation, and sometimes just not knowing what their rights are. And they pay for it for a very long time. And so I hope that something that you've heard here today has helped you to realize you do have rights and you must not operate out of fear. And just most importantly, that you know that there is help as you go through your divorce, and hope for creating a life you can love as you are starting over stronger.